Yeah, good morning, everyone. So yesterday we saw volatility in Indian market and across the board, mainly driven by geopolitical issues. US market remain range bound on that account. And today morning, markets are showing some positive trend in the Asian market with positive bias in some of the countries. Uh, Geopolitical issues related to Taiwan and China. Yesterday, China had taken out drill in the near about sea area of Taiwan, and that was well planned by the China before only, and that got concluded also, but not having any direct impact on Taiwan in interland. So, but the uncertainty continue to remain. Can't see what will be the step by China going forward. So that will have some cautiousness in the market as well. Apart from that, uh, oil came off further. It continued to decline since last 3 days. It's now somewhere around $94 versus last $97 yesterday. So this is likely to have some positive impact on various companies in the Indian market, including paints and all. So, and also overall economy also it will have some positive impact. Today we have RBI meeting as well. So RBI has expected to increase interest rate in this by around 35 bips. So, but the decline in oil prices can act some positive sentiment or talk from the governor in this meeting. So overall seems a bit positive, though there are uncertainty in the market. Now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. See, today we expect a positive night and remain a sidewise because Nifty trading in overbought zone, and we saw that yesterday that Nifty faced the immediate resistance around 17,490, 500 range. If Nifty break that level, then we expect further rally. Otherwise, we see some profit booking at this level. Next immediate support place around Nifty around 17,300, 17,240 at downside. Below to 17,200, then next immediate support place around 17,006, 16,900 at downside. So we see today's open a gap up and we see remain a sideways, but closely watch important level that's 17,300 below. Then we expect further pressure in market and upside 17,490 is the immediate resistance for Nifty. Bank Nifty also trading the overbought zone and we expect some profit booking in higher range. Next immediate resistance place around 37,900 and 38,000 in upside. And downside immediate support place around 37,300 and 37,000 at downside. To if Nifty, Bank Nifty trade above 38,200, then we expect further rally. Otherwise, we see some profit booking at current level. Nifty Finance also trading in the overbought zone. Next immediate resistance place 17,300 and support place around 17,100 at downside. Stock specific DV slab looks positive at current level. We expect DVs move towards 3940 and 4000 and upside. Support place around 38 downside. Second, Infosys also looks positive at current level. Stock specific market is good, but Infosys next immediate resistance place around 1640, 1670 and support place around 1560 at downside. Ultratech looks weak, facing the 200 BMA resistance. We expect in profit booking in Ultratech segment. Downside for intraday, 64.40 and 64 the 100 is first target. Below that level, then we expect further pressure towards 6100 and maybe 6,000 at downside in Ultratech segment. So we expect stock-specific momentum in the market. Overall view is cautious. That's it for technical daily to guidance.
Yeah, thank you, Vikas. Good morning, everyone. So, as per derivatives data front, as we said in the day before yesterday's session, also that in the Nifty 17,400 and 500 strike is an extreme resistance level where we are seeing that continuous call rider positions are getting added up. While another factor which we have seen and which the position got shifted in yesterday's session was the 17,200 where the new put writer position was very strong and was holding a strong support in yesterday's session. That strike got liquidated and directly got shifted on the downside towards 17,000 and 16,900 level. And on the upper end, we are seeing that at 17,400 and 500 strike, call rate position almost got added up for almost around 9.5 million positions. At that, two strikes got added up. So it would be very difficult for Nifty to get a clearance of 17,500 level. Once if Nifty gets clearance of 17,500 level, then only we might expect another 200 or 300 point on the upper end. Another important factor which we are seeing is that India Wix yesterday increased by 4%, almost gave close around 19.2 level. So that is also a negative concern currently for the market. Two to three negative concern which we have seen in yesterday's session was India week's buy position and the index future buying position. We are seeing that index future yesterday gave a net selling of around 829 crore positions. So whenever the index future goes in the negative front for continuously 3 to 4 days, that seems to be a negative concern for the market, and we are almost in recent times that whenever index futures goes into negative or short selling, there is a possible selling in the market in coming 2 to 3 trading sessions. So currently the view is cautious. On the upper end, we expect that the fresh buying will be initiated only above 17,500 level, and on the downside, the support for the Nifty would be around 17,200 and 17,000 level. So do not create any long position currently in the market. If any long positions need to be given, we will recommend it. So hold your long position with the strict stop losses and create fresh positions only above 17,500 level. The stocks that look positive for the current trading session, we are seeing 2 to 3 stocks which are getting continuously OI positions getting added up at nearest strikes, and we also recommended in previous trading session that again we will recommend. First would be the Ambuja Cement, second would be Indian Hotel, and third would be Ibul Housing Finance. These three counters we are continuously seeing that the stock has been consolidated and OI positions getting added up. So as for the risk and reward, we expect the more reward against the risk. So currently, you can watch for these three counters for the long position. That's it from the derivative front. Thank you.
Good morning. So we will discuss results quickly. ICRA Limited, the rating company result has improved. So all three rating companies' result has been good, and they should outperform going forward. The revenue grew by 16% year on year. It was mainly driven by the knowledge services revenue, which grew at a faster pace at 26% year on year. And drove the overall growth, while the ratings revenue grew by 7% year on year. In comparison to CRISIL and CARE, both CRISIL and CARE rating revenues grew by 16%. So CRISIL and CARE have taken away some market share from ICRA. Although overall we are positive on ICRA. Jyoti Resin's result has improved. It's a small company in the same segment as Pidilite, which is like a competitor to Fevicol. And revenue over here has grown by 11% sequentially and more than 100% year on year. Gross profit margins were stable despite a rally in the raw material prices, and EBITDA margins continue to expand. They were at 17% versus sequentially 13% and year on year 15%. The stock is expensive on conventional parameters, but when we compare it with Pidilite, which trades at 65 times FY24, this seems decent at 25 times FY24. So we are positive here. Manappuram Finance result is below expectation. The provision came higher than expectation due to GNPA increasing in the MFI segment. So the MFI segment GNPA increased from 3.5% in March to 7.7%. We are neutral over here. LIC Housing Finance result is in line with expectation. Although if we see the total stressed loans, that is stage 2 plus stage 3, they have increased from 7.7% to 8.9%. So we are neutral here. Spandana Spurti Financial, the microfinance company, result has improved. This is mainly because whatever pain that was there in the book because of management transition for 3 odd months, there was no top management and there were many lapses and people were not paying up loans. So all those stressed loans have been written off, worth almost 700 crores. This has reduced the outstanding restructured book from almost 15% to just 3.5%. So going forward, maybe one odd quarter, there could be some small pain, but post that the cleanup is done, and from here, focus is on growth and increasing the ROA. We think that maybe over next couple of quarters, ROA will start touching 3% levels. But because of very high capital adequacy, the ROE will remain restricted at around 9-10% kind of level in the near term. But market will recognize the improved ROA, and accordingly, we feel that one good quarter of low credit cost will result in decent re-rating over here, and stock can re-rate from current level of around 1.1 to maybe upwards of 1.5 to 2 times over a period of time. So that's it from my side. Thank you.
Good morning, everyone. Aptech has posted declined set of numbers for the quarter, majorly on the margin front. Revenue came in at 56 crore, which declined by 13.5% QOQ. However, EBITDA margin came in at 6.7% versus QOQ of 15% and year-on-year of 15.7%. Stock is trading at a PE of 19.9 times TTM EPS. Ganesha Ecosphere has posted declining set of numbers for the quarter. This is also majorly on the margin front. Revenue grew by 1.9% QOQ. However, EBITDA margin came in at 9.2% versus QOQ of 11.4%. Stock is trading at 22.1 times TTM EPS. Thank you.
Good morning. Dalmia Bharat result was above expectation. Sales volume came at 6.2 million ton versus expectation of 6.1 million ton. Realization per ton came at 5,326 versus expectation of 5,220. EBITDA per ton came at 945 versus expectation of 875. Margins were also above expectation at 18% versus expectation of 16.8%. Welspun Corp result has declined both on revenue and EBITDA front. Revenue came at 1322 crores versus 2011 sequentially. EBITDA came at 29 crores versus 71 crores sequentially. Share is trading at EV by EBITDA of 6 times FY24 earnings. Thank you.
Good morning. Gabriel India announced its results. The result has improved. Revenue came in at 721 crores, which grew by 5% sequentially and 59% on a YOY basis. EBITDA margin came in at 7.1% versus 5.5% sequentially and on a YOY basis. The stock is trading at a PE of 14.5 times FY24 EPS. Balkrishna Industries announced its results. The result is below expectation. Revenue came in at 2,646 crore as against an expectation of 2,486 crores, which grew by 11.5% sequentially and 46% on a YOY basis. EBITDA margin, however, was below expectation of 23%, which came at 17.2% as against 21% sequentially and 28% on a YOY basis, primarily due to higher cost of raw materials, logistics and power and fuel, with some relief expected in Q4 FY23. The company expects demand momentum to continue across geographies and segments, driven by pickup in economic activities, government spending on infra worldwide, and robust prices of commodities and agricultural commodities. The sales volume guidance for FY23 stands at 320 to 330 million, 320 to 330 metric tons. Balkrishna Industries expects the current demand momentum to persist. However, in Q2, they expect sluggish demand given macro challenges in Europe, coupled with heat waves and inflationary trends in USA. The stock is trading at a PE of 27 0.4 times FY24 EPS. Thank you.
Yeah, uh, Adani Enterprises reported numbers, and numbers were positive. Uh, we saw improvement in most of the segments of the Adani Enterprises, wherein the material segment, wherein most of the resource management segment, wherein more of a trading type of activity. Revenue has increased very sharply, and also the profitability has also improved. The key point to note is that airport business is now doing very well and is in good profit, wherein EBIT was around 230 crore versus last quarter 75 crore and last year 70 crores. So this is showing some turnaround in airport business, so which can be taken positive by the market. Valuations are very steep for Adani Enterprises. Then Britannia reported numbers, and results were below expectations, but management has given positive outlook on the company, wherein they had said that the improvement will be visible in Q2 itself of the cost decline, and they may trend towards their historical operating margins. Most of the consumer company had said that they will be seeing improvement in H2, but Britannia has indicated that the improvement will be visible in even in Q2 itself, not in H2. So that will act as positive for Britannia. Valuations are at around 43 times FY24 earnings. So there is some scope for improvement over there as well. Then Dabur also reported numbers, and numbers were in line with expectations. Margin quarter on quarter was stable for the Dabur, whereas we had seen margin for most of the company declining, where here the margin came in line with expectation, and quarter on quarter shown some improvement, though year on year there is still some scope for improvement from here. So here the valuations are again at 43 times FY24 earnings, so reasonably okay, can see some improvement from here as well. Then Stockcraft came up with the numbers, and the number had shown some improvement in this quarter. The key thing is that management has indicated that they are looking at EBITDA margin of around 11% in this quarter, which was earlier their guidance. Whereas in this quarter, the EBITDA margin was only 7.3%. So management is looking at expansion in EBITDA margin in the coming quarter. The expansion will be more driven by the reduction in the cost because of the decrease in the raw material prices. And also growth-wise, they are looking at double-digit growth in the FY23. So guidance seems quite positive. Stock has upside from here, so outlook is positive for Stockcraft. Then Balrampur Chini reported poor number. Here revenue and profitability both declined. EBITDA came sharply lower at around 44 crores versus year on year 134 crores. So there was a sharp reduction, though this is an comparatively a softer quarter for Balrampur Chini, but the decline was very sharp. And also the PAT is also came off on that account. So results were quite declining for Balrampur Chini. Another company which came up with very poor number were Alembic Pharma. Alembic Pharma reported a bad set of number, mainly driven by the decline in the prices of product in US market, and also company has taken charge of around 115 crores in this quarter on inventory. So that was a non-recurring expenses which has come up. Even if we adjust to that, then also the EBITDA looks lower. as compared to last year. Last year, the EBITDA was around 236 crores, whereas this quarter, the EBITDA is just 15 crores. So there is a substantial decline which has happened to Alembic Pharma. Now, results for next week, Monday. Adani Port is likely to report okay set of number with year-on-year flattish revenue and EBITDA. AIA Engineering is likely to again show improved set of number. Last quarter also we saw improved number, and this also likely to continue in this quarter, wherein quarter-on-quarter margins are likely to improve by around 100 bips. And Bharti Airtel is also likely to report improved set of number, wherein quarter-on-quarter ARPU is likely to increase from 178 to 185, and EBITDA margins are likely to remain stable, whereas quarter-on-quarter revenue is likely to grow by around 3.4% and EBITDA by around 3%. Then JK Tyre is likely to report number. We had seen that the results are for tire company has come comparatively softer, but the outlook seems positive for tire company. Kaveri Seed is likely to report number. Here again, the numbers are likely to show improvement. Year-on-year revenue is likely to grow by around 14% and EBITDA by around 22%. Minda Industry is likely to report okay set of number. Narayan Hirdale is likely to report improved set of number, wherein revenue and EBITDA both are likely to show very positive trend in this quarter. So Narayan Hirdale, positive number. National Aluminium is likely to report declining number, wherein quarter-on-quarter EBITDA margin will come off very sharply from 38% to 26%. Power Grid, okay number. It's more of every quarter stable numbers are coming for them. And Suvin Pharma again likely to report okay set of numbers. And Indian Hotel is likely to report good numbers in this quarter, wherein most of the other hotel company has also reported very good number. So similar trend can be visible in Indian Hotel as well. Whirlpool is likely to show numbers which if we compare it with the normal pre-COVID number, then it will be more of a lower number as compared to that. Though year-on-year it will show improvement, because last year same quarter there was a COVID. Because of that the sales was lower, but if we compare it with pre-COVID level in this quarter, then the numbers will be below. So that's all from equity side. Now request commodity people to take over from here.
Yeah. Thank you, sir. Good morning, everyone. Commodities prices are likely to trade in a positive zone. So buying on dips is recommended in gold around 52,000 will be a good level to enter with a stop loss of 51,800. Again, prices can test 52, 350 to 500 levels on the higher end. Silver too looks attractive. 58,000, 57,800 are good levels to enter long. So buying with a stop loss of 57,400 and prices can test 58,700 to 59,000 on the higher end. Similarly, crude we have witnessed weakness below 73.50 and prices have corrected. So there could be a pullback if sustains below 7030. One can enter long for a trading prospect. However, 7100, 7150 could again be a resistance area and should witness some selling pressure. NG can be bought around 640 levels. 640 levels and maintain a stop loss below 635. Prices can test again 650, 55 levels on higher end. Copper looks attractive. Have witnessed a breakout about the resistance zone So again, buying around 630, 649 to 47. These are good levels to enter long, and one can maintain a stop below 650, 43. Prices can test 660, 62 on higher end. Aluminum too looks good. Buying around 209 levels with a stop loss below 207. Prices can test 213, 250 levels in coming days. Zinc had witnessed a spectacular run yesterday, so momentum should continue. Buying around 308 would be a good level, and maintain a stop loss below 306. Prices can test 313 to 15. So buying on dips is recommended in today's market. That's it from me. Ria can take over from here. Yeah.
Good morning, everyone. So on the currency front, well, dollar index has fallen almost 0.5% ahead of July labor market, which is expected to come on a softer note. The most important event yesterday that happened was the Bank of England policy meet. They have hiked the rates by 50 basis point and are now also forecasting a recession by the quarter four of the current financial year. This shows that the economy will be under quite a lot of pressures owing to the worker shortages, supply issues, and such, which will let the inflation remain on the elevated levels and will lead the economy weakness. So for the coming September meet, another 50 bips rate hike will be expected. Today, there is RBI's MPC meet also. So we are expecting a rate hike of around 25 bips, thus bringing the repo rate to 5.15%. I think it is the 25 basis point rate hike is sufficient for this MPC meet, taking into consideration that it is followed by two larger rate hikes. And also, if you look at the different measures that have been taken by the RBI and the government, it has brought down the food and fuel prices, which will aid into the cooling of the inflation numbers. Thus, on the RBI front, I think a 25 bips rate hike will be expected. They'll continue with their forecast of 2023 inflation at around 6.7% and growth of 7.2%, and will again reconfirm their commitment to minimizing the rupee volatility, owing to the sufficient forex that they have accumulated over the pandemic years. So I think this is what translating into the today's Indian rupee momentum as well. The drop into the dollar index and the rate hike is what being factored in into the open. It opened with a gap down at 79.34 and is seeing a strong bearish momentum. For today, the major support will be at around 78.88. That will be a major support for the Indian rupee. If it gives a breakdown to that, we could see 78.50 attending the levels of 78.50 on the lower lows. I think once the RBI comes out with their rate hike of 25 bips, there could be a there could be a very strong, retracement that could happen. And I think the most prudent way to trade into the Indian rupee is wait for the lows to happen. Unless there is some major aggressive hawkish stand taken by the RBI in the current policy meet, I think the Indian rupee downside should be limited around 78.80, 78.69 levels, and it should pull back from that level. So I think one should wait until the MPC statements comes out. You could see some bearish strain until then, but the prudent way to go is to go long from the lower lows into the Indian rupee. Talking about the other pairs, well, the JPY-INR has opened at 59.37, and I think it will remain consolidated, taking into consideration the past two sessions and the pullback that USD JPY has done. So 59.70 will be the resistance with 59.20 as the support. It will trade within those levels. A strong bearish trend could be seen into the JPB INR. Take into consideration the 50 bips rate hike, putting the economy into the Bank of England confirming the recession fears and the overall sentiment going negative over the GBP. So I think it will continue to make lows in today's session as well. If there is a small pullback, you can short from those level. 96.25 will be a very good level to go short into the GBP INR. Otherwise, you could wait for a breakdown of 96. The target that you can keep in GBP INR is at 95.60. For the Euro INR, I think 80.96 will be a support for the intraday sessions, and below that you can go for a short for a target of 80.62 by keeping the level stop loss at 81.18. So that's on the currency front. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.